So let's bring in Bob Broeksmit. He is CEO of the Mortgage Bankers Association. So things were pretty glum, pretty dismal, Bob. Activity declined 35% below year-ago levels 2 months ago. But we've got 7 straight weeks where they've gone up and actually up 18%, not sequentially, but up 18% year over year last week. That's up 18%. That's not getting back. That's actually above last year. Why?
Yes, good morning. And what you're referring to are mortgage purchase applications to bounce back really nicely. As you mentioned, we were down a third over last year, which I guess the glass half full side at the depths of the pandemic could be that we were still doing 2/3 as many purchases as we were the year before. But we've now reversed that. And you're right, we're up 18% year over year. So we're seeing that as states reopen and we entered this pandemic with a shortage of inventory, borrowers and home buyers are leaping back into the market to the extent that they have not been affected economically by the pandemic. And that's what's leading to these increased numbers.
And people are faced with two contrasting things. One is all-time low in mortgage rates, 3.37, but people may not have a lot of money because of the pandemic and they're not working. So what is the more they're hit with both sides, basically.
Yes, those are certainly cross currents, but we think that because of these record low interest rates, as you mentioned, you can get a mortgage now for under 3% if you pay a little bit in points, buy the rate down a little bit. And 15-year rates are already below 3% at about 2 7/8. So I think home buyers are saying, if there's a good house on the market, I can afford more than I could before with these low rates. And if they're fortunate like we are, where we can still work through this pandemic from home or whatever the other arrangements are, they are going back into the market in a big way.
And big refis, no doubt. Maybe people can, tap the home equity too. Diana, you have a question?
Yeah, I do. Bob, I'm interested to know, you look at these mortgage delinquency numbers, and of course it was only a decade ago that we saw huge mortgage delinquencies and a massive foreclosure crisis. These borrowers, you have millions of them now not paying on their loans. They're not allowed to be reported as delinquent under the CARES Act, but they are in fact not paying. Are you concerned that we're going to see a wave of foreclosures, or do you think this is going to end very differently?
I think the latter, Diana. I think it's going to end very differently. We have a really good program from Fannie and Freddie that was just announced a couple weeks ago that permits payment deferrals. So when people have their forborne payments just added so that it's paid when the loan is paid off, whether it be a refinance or selling your house. And there's no qualification for that. In other words, if you get your job back or whatever your hazard, whatever your hardship was, is resolved and you can resume making your regular payment, it's a much simpler process than the modifications we went through during the crisis. And these low interest rates will really be a wind at our back through this. So we're optimistic that most of these borrowers who are able to defer payments will be able to resume making payments. Of course, that depends on the shape of the recovery, but we're optimistic.
So not everyone's going to move out to the burbs, but it seems like a lot of people would move. So will it be bifurcated in terms of prices? Will it be weak in big cities, but prices will be strong in some of the bedroom communities?
I think it's too early to say. There are those cross currents that always are at play where the home prices don't move in lockstep from market to market. And while you may see some strength as people seek less dense areas, we think the cities will come back too. But remember, you have other things at play there, like the SALT taxes and the limit on the deductions and things like that can have variations from market to market. But broadly speaking, we expect it to be robust. We're looking at about a 4% price increase this year in 2020.